Good afternoon, traders, and welcome to the In the Zone Daily ACD Recap for Thursday, May 19th, 2016. In these recap videos, I go over the best ACD setups that occurred on this day. These videos are intended to show the type of trades the ACD method offers on a daily basis. So let's get into today's action. Now, first let me say I apologize for this video being up a little bit later than normal. On Thursdays, I have to take my daughter to gymnastics, and on those days, we have to leave about 4, and that doesn't allow me to be able to do a video until after I get back. Okay, so today we had a narrow range pivot range, which tells you we're going to have some volatility, and we put in our opening range. For those that might be new, this gray area is the opening range. It's the first bar, the first 10 minutes of the day. I marked the high and the low, and that makes the opening range. And then we calculate from the top up to the A up, and from the bottom down to the A down. And these are our A points. And today we had a bearish bias because we closed below our pivot range. So you want to be thinking short. And so this morning we pushed up here, but we didn't quite make it close enough to the A point to fade the A. And so this didn't quite make it up there, and then price rolls over, and then we have this huge bar that comes down. And if you would have tried to get in front here of the A down, fading this A down, you would have gotten run over today. Let me bring up my 1 minute chart here. Okay, so here's the 1 minute chart, and you can see that price just sliced right through the A down level. And if you had an 11 tick stop, you would have gotten taken out pretty quickly. I think it's like 1, 2, 3 minutes here, and you would have been done. And so you put the fade on here, and you're stopped out here, and now you're like, okay, now what do I do? Well, today, it was a tough day to trade. Let me go over a couple of things. One is, okay, you have 1, 2, 3, 4, 5. So right about in here, you've got 5 minutes below the A point, and this confirms the A down. Now, if you got ran over by trying to fade the A, and I like to fade all the A's on the first touch, okay? And I put out a piece about a week ago that said keep it simple. And one of the points was, these were some of my default thoughts that I always keep in mind when trading the ACD on the ES. And one of them is to get in the habit of fading all the A's on the first touch. Now today you would have gotten run over, and today was a scary one. And I say that you should even fade the scary ones, okay? Now, today it didn't work. Well, nothing works 100% of the time. But your limit, your loss here to 11 ticks, and it took you out, and then it confirms the A down. Well, another point that I made on that piece, keep it simple. Another one of my default thoughts is never sell in the hole. Okay, don't sell. When you get an A down, don't sell right away. Wait for a bounce. And that's because, and today was a perfect example of this, and let me get rid of this. Let me show you the bounce first, and then I'll explain. Okay, so we confirmed the A down in here. You don't want to sell here, okay? You want to wait for a bounce, and it pushed down, put in a new low, then it got a bounce. The bounce wasn't as good as you'd hoped for, but it did come up to 31.50, okay? So this was the best bounce that you could get. Now, let me put this down, and let me explain. Today is a perfect example of another point that I make on that piece called keep it simple. One of my default thoughts is whenever in doubt, be on the long side, okay? I want to be long on most occasions. I would say 75 to 80% of the time you want to have a long position on in the ES. And the reason for that is the ES is a reversion to mean type of market. It's an index. It has intrinsic value. they want to hold value. They don't want to let value fall, and it's not going to go to zero. Okay, so today's a perfect example of that. As negative as things were this morning, as bearish as everybody was, and as big of a sell-off as this was today, all the way down to 22. We even took out last month's low. So this is a lot of negative, press, if you will, and a lot of negative happenings. But look where we finished. We finished way up here, okay? And so all of this right here is the point that I'm trying to make about most of the time be long, okay? All right, so now let's get back to taking risk, okay? Let me show you, if you would have waited, let me bring that back. I'll get a time, we'll get a time stamp here. So this was about 10:02, okay? So about 10:02, which is going to be, well, it's going to be down here. Let's say you shorted down here once it confirmed, okay? And your stop is going to be up here with a closing bar into the opening range, okay? So let's show you, I want to show you, this is going to be your risk, okay? I'll change this over to red. All right, so this is how much risk you're taking on to sell this once it confirms the A down here. This is selling in the hole. You don't want to sell in the hole. Price, you want to see a bounce, and you want to see a bounce, and just below the opening range is a good place to look for a short. And the reason for it is here's your risk. Okay, there's your risk if you wait for the bounce. Much better, right? You don't want to sell in the hole. You want to wait for a bounce, now sell, okay? Because you're only risking this much instead of this much. And this trade produced about 8 points or so, maybe 9, and so that's a good trade right there. So you took 11 tick loss over here, you turn around and follow it up with a 8-point winning trade. Okay, now let me take this off. Okay, so another point that I want to make is that the high here and the low here in the first hour make up the initial balance. Okay, market profile people, they talk about the initial balance the first hour, and that's range, and then you're looking for range extension. And today, that initial balance was 16 points wide, which is about twice as wide as the 30-day average. Okay, so there's not much opportunity to extend, the range today. They tried this is all the range extension they got today. Okay, and then price moves sideways here, and then it starts to move up, gets back into the opening range, pull back, and then back up to the top of the opening range. Now up here, this 38.50 was the C up, and they couldn't spend enough time here, so it didn't quite make the C up. But the A down was confirmed, and then it was stopped out up here. If you use Fisher's method of the top of the opening range, it stopped out here. If you would have gotten short here, okay, where I told you after the bounce, and you held all day, okay, you should have gotten out here on the closing bar back into the opening range. All right. Fisher would use the B point would be the top of the opening range, and so today ended up being, not such a great day. All right, so that's some points that I want you to pick up on is, whenever you get an A down, wait for the bounce, reduce your risk, and then get on board the short. Also, pay attention to that initial balance to see if there's enough room. Like today, we didn't have really enough room to extend the initial balance, the range, and we went sideways for a good part of the day after we confirmed here. We went sideways for a while, and then it finally got some legs to the upside. So that's going to do it for today. Hopefully these videos are helping you guys understand the ACD method. And like I said, if you have any questions, any comments, or whatever, shoot me an email or send me a tweet on Twitter, and I'll be happy to answer any kind of questions you might have about the ACD method. All right, guys, that's going to do it, and we'll see you later.